Assalamu alaikum and welcome to Islamic Finance 101. Today we are continuing our discussion on the modes of financing. We are looking at a debt-based mode of financing. So let's start. Bismillah. Just before we continue with today's episode, I want to let you know that this course will be available on our platform Muslim Money Matters with additional challenges, examples, and assessments where you can test your knowledge by registering with us and becoming a member. Also, when you complete this assessment, you will be able, inshallah, to get a certificate of Islamic Finance 101. So check out Muslim Money Matters website for more details. Let's get into today's episode. Today we are talking about second way of doing your financing arrangement. That is not profit and loss sharing. It's not based on the partnership. Now, often when you want to do partnership way of financing, you are engaging with a group of people or somebody else to do something. But that something will ultimately lead to having to buy, sell, or lease some asset. So even when it comes to the financing through the partnership, the way that is done is at the end still with sale or lease of some kind of a product. Partnership is really just the way you come together. Partnership is not the way you make money. Partnership is the way you are pooling your resources to do then something. Start a business that will create money or buy something and sell it or lease it to make you a profit. Now, today we are looking at a simple transaction where you are not necessarily looking to get into the partnership with someone. We are going to look primarily at leasing or Ijarah, Murabaha or a sale with a markup and a few other forward contracts. So first one I want to talk to you is a leasing. What is the leasing? We see the leasing is talked about in Quran. We have example when the Musa is exiled and he goes through that journey. He meets two young ladies, which he helps and water their flock. At the end of that story, we see example when one of the young ladies goes to her father and she says to her father, "Oh, my father, hire him. Indeed, the best one to hire is the strong and trustworthy." So we see here legitimacy of hiring somebody. In the past, it used to be that we used to hire a person to do a job. And this is, by the way, a beautiful reminder that when we do hire, what is it that we're looking in people? We look at their strength, which is ability to do their work, and this is a competence, and the trustworthiness, which is that they will not corrupt that ability or strength or competence with intentions that go against the reason for which you hire them. So they can be trusted, they can be relied upon, that they will not fail that amana or obligations, moral obligation and trust that you put them in. And so there are many other narrations that clearly show legitimacy of Ijarah. In another narration it is said, "Give worker his wages before his sweat dries." And in Hadith Qudsi, Allah mentioned that I'm opponent of three on the day of resurrection, and if I'm someone's opponent, I will defeat him. A man who makes a promise in my name, then proves treacherous. A man who sells a free man as a slave and consumes his price. And a man who hires a worker, make use of him, then does not give him his wages. Obviously, that means hiring somebody for a wage is permissible. This is a sort of normal, standard, let's say, contract of employment. And we see the etiquettes involve adab of paying on time, paying person who does the job, being fair, and so on. In the past, it used to mean employ the service of a person on wages. Now, today, we are also looking at this as something that is given on a rent. So you are transferring the right to use a particular property or item to another person in exchange for a rent claim from him. So this could be used as a form of investment or a mode of financing. Sometimes you might buy commercial building, and in that case, you might give it for a lease, and then you profit from that. Or you might jointly buy something, shopping center or whatever is it that people are buying, and then again generate the profit through the lease. And at the banking level, we see very popular is to structure it as a home financing arrangement where you are leasing something. It's sort of a lease that ends with ownership. Now, what's the difference between conventional finance and financing through the lease? Well, as we said, you need to have some asset. You are leasing something. You are making profit against something that is tangible. And so all of these arrangements need to follow the rules of lease, that you do end up getting some asset that you are engaging and structuring around that asset. And sometimes it's not easy, especially I see in many Western countries, in terms of how the profit is calculated or rent price. Sometimes there are larger forces in society that affects this, or arrangement or benchmarks. These are all of the things that scholars and practitioners are always working to improve. But as a general idea, we cannot just structure this arrangement where interest is replaced with the word rent and it's all good. I see a lot of times you might have just a broker who says, okay, I have this paper to say that this interest is rent and this, therefore it's halal. This is not how it works. So there has to be a solid arrangement. There needs to be a way that we are transacting something, and this has to follow the normal rules of Islam when it comes to the transactions. We cannot just change the names. And this remains always the challenge in many of these jurisdictions, where we cannot as easily execute this transaction as we wish. But we need to make sure that it is not just changing of the name, but it is something that is structurally different. In terms of bigger financing opportunity, we see lease also used in bigger project where we can structure bigger arrangement, which we call sukuk, or what is equivalent of investment certificate. Sometimes people say this is a type of Islamic bond or something like that. But we have a sukuk, which is a lot more people pooling their money to buy property and lease it and make a profit. So whether you call this sukuk or a fund or any other arrangement, the idea is the same. We pool the money, we do something with money, and like buying the property, or you might have even these real estate investment trusts, REITs. They are also very similar to sukuk and to these funds. They might pool certain assets and then they might lease, and then proceeds are distributed to the investor. So from investment opportunity to the financing opportunity, we see the lease is very versatile, can be used in a number of the ways. And often you would find a certain government organization might lease certain assets. There would be a very convenient way. I only suggest that, rather than in some of these structures, rather than using existing infrastructure to really encourage economic growth, that we build new assets and genuinely contribute, create a job, employment, and so on, and then structure around these when we are leasing it, particularly in sovereign sukuk and so on. Another way of financing is what we call Murabaha. Murabaha is sometimes called cost plus sale. So what is simply Murabaha is when financial institution, let's say, wants to finance the car, they would have to get it from the supplier, let's say for $20,000, and then they offer it to the customer for markup price, which is, let's say, $20,000 plus whatever profit they add, $5,000. And so this markup is the profit for the financial organization. Now, banks should take ownership of the asset before they're selling it, and this is deferred cost plus sale, Murabaha. Now, a lot of the times we hear this Murabaha being looked very suspiciously. Is it a problem because, spot price is something and then the deferred price is something else? Well, as long as in the beginning of your transaction you are clear for which price you are going, it's okay to sell something on deferred basis for a higher price. As long as in the beginning you say, okay, you want to pay this in 5 years, this is the price. What you cannot do is once the contract start changing the price as the contract or the length of time goes on and on and on. Now, In a lease contract, because every year you have, or whenever is your period that you are charging the rent, because you are still the owner of the asset, you can tie the price to some benchmark and you can have that variable impact. So you might say, in the lease, I will charge you $1,000 plus whatever is inflation next year. Inflation go by 5%, then your price is 5% more or something like that. And so you both can agree on something that is not too volatile. You could limit this a little bit, but you are agreeing to some objective benchmark, especially in the long-term lease contract. In Murabaha, in a sale, you cannot have that variable element because unlike in lease, you are not anymore owner of the asset. You sold the asset, so the price must be fixed. This is one of the different features of these two. And so you want to make sure that in the beginning you price in Murabaha how much are you getting it. So there is no problem if in the spot is a different price versus deferred payment is a different price, as long as you know what is your price. Now, some of the main issue with Murabaha comes again that people see Murabaha being used and abused. And often the way that Murabaha is abused is when there is a two sale back to back. One is a spot and deferred sale when they are joined, or there is some sort of a transaction which is using Murabaha and then the spot sale attached to it to create like a banking loan where asset is sold back and forth. So asset is just sold on paper to create the loan. This is what we call bail-ina or synthetic or organized transactions, even when it is what is called tawarruk, that is pre-organized, or whether it's through some brokers where there is no real buying and selling. So any of these synthetic transactions where the aim is just to get a loan through the synthetic buying and selling of the assets which you are not buying and selling, pre-organized, this we would say that this is what creates the problem. But what you want to do is that if you are engaging in this particular sale, it's very important that you follow the rules of sale so that asset exists, there must be ownership identified, it comes into your possession, sale is instant and absolute, there is a property of value, and we know specifically what we are buying and selling. The sale shouldn't depend on any contingency or chance. There is a certainty of price, and sale must be unconditional. So if we are satisfying these all conditions and we are not just creating a loan and substituting the markup and all of the names, Islamic names and profit, and we are not just playing the game, then this is a valid sale. And usually in institutions, it is organized by appointing somebody as an agent to buy, and then they organize the paperwork, how to sell it. And of course, again, just like with any other arrangement, especially in the Western countries, how the institutions take possession and how they do this, you want it to be genuine sale, real sale. We have to work towards that. In that case, if that all is done, then this is one of the permissible ways of doing the transactions. In Murabaha and in general, when it comes to the late fees, there cannot be charge. A person cannot profit from these things. This is an increase on debt, that is riba. So we see in these institutions, they would usually have a mechanism where that penalty is given as a charity. In Murabaha, particularly, you cannot do rollover because you don't have any more assets. And if you are doing similar securitization of Murabaha, where you're pooling asset through the sukuk or fund or some other instrument, once you sell that asset out of that fund, what are you owner of? You are the owner of the debt that is coming. So if you got $100 million building there and then you sold 110, then you are proportionate owner of that debt. Okay, so be very mindful. That's why sometimes when they structure some of these funds, they put some other assets so that this is not majority. So that with the tangible assets, like let's say you put more than half a lease assets where you have retained ownership of a building, and there is some that you sold on deferred payment basis, there is still something to negotiate, then they can package that and then they can sell that on a secondary market, on a stock exchange, and so on. This is again just for those of you who are into these sorts of things. And finally, 2 more contracts very quickly. Salam and Istisna. So you know how sometimes you don't have something and you need money to do some business and you will have a product later on. This is reversal of what we were talking now. In Murabaha, you don't have money, but you need asset. So financial arrangement is to give you asset first, get the money later. And usually there will be increase in the price. Now, Salam and Istisna are reverse. When you need money now, but they will be asset later. So it's total reversal. So what are these 2 things? Okay. So the first, we call it forward selling contract. Salam, different from futures. Futures is when both things are deferred in a future date, which is not permissible type of contract, where both offer and acceptance or payment and delivery is in the future. This is debt for debt. This is never permissible in Islam by consensus. So when you have a forward, something is coming now, something is coming later. Salam is the sale where the seller undertakes to supply some specific goods to the buyer at a future date in exchange of advance price fully paid at spot. Okay? So what is the legitimacy of this? We see that during the time of the Prophet ﷺ, there would be a situation where the Prophet ﷺ would come to Medina and people would sell their produce, like dates that are coming in the future for a price now. We see the Quran talks about legitimacy of contract of salam when it says, "O you who believe, when you deal with each other in transactions involving future obligation in a fixed period of time, reduce them to writing." And Ibn Kathir talks about this situation where the Prophet ﷺ said, "Whoever pays money in advance for dates to be delivered later should pay it for non-specified measure and weight of the dates for a specified date." So we see the Prophet ﷺ here is trying to clarify that don't just engage in this transaction without clarifying what kind of dates you're going to get. What is this product going to be? So just to avoid any future problem that might happen. Why do we need this? This type of financing is usually used for the people who are farmers, merchant businesses involved in agriculture and industrial production and trade. And so anybody who needs the capital now, and they will produce something tomorrow. And what are the permissible type of commodities? It is something that is standardized usually. Something that is the same or standardized that is very well known and understood. These are your fungible goods. The second type of these contract, this time manufacturing contract, is called istisna. It's another type of sale where commodity is transacted before it comes into existence. This is for manufacturing of specific commodities. So anything that is in need of being manufactured and it's not standardized, for which we have salam, but it's specifically made. You say, I want this sort of table, I want this sort of house, a ship, and whatever. You need to specify it and give as much as detail possible to avoid any kind of future misunderstanding. For this, we use contract of istisna. You might see similar types of contract being used today in modern transactions to build the highways where company might build, operate, and then transfer on this same basis. Because think about it, something like this I have seen being used in Turkey, where, for example, the company might build a highway, and as a payment, they are given right to charge certain fees for a certain period of time. And then within, let's say, a decade or two, this passed back into the ownership of the government. So there are a number of ways that these transactions can be used. I'll give you one example. Let me know, where do you think what contract is very suitable? Let's say a country that produces oil that wants to expand its refining facilities. They may sell oil products through which contract instead of borrowing on the basis of interest and use the price received in advance. So they want to expand their capacity in the refining facility, and they want to get money now and they want to give oil later. So think about it. In these circumstances, what would be Salam or Istisna type of a contract where they are engaging. In this case, because the oil, it's a fungible, it would be a Salam type of contract. But in any case, these kinds of arrangements can be made to finance major infrastructure and other projects in the country. So this brings us at the end of this course. What we hopefully learn is that to look Islamic finance or commercial transaction, we need to look at the basic DNA of the transaction. What is at the end of the day transacted? What is the subject matter of the contract? What is the consideration? And we have seen the rules that affect these two basic types of transaction, where one transaction is a charity or not-for-profit activity when what is transacted is same for same, versus transactions where what you are buying and selling is monetary for non-monetary asset. In these cases, you can make money, you can have profit. And so based on these two principles, we are then constructing the mechanisms to engage in financial transactions. And so Islamic financial institutions or us personally, when we are creating solutions that we need today, are looking that it is asset-backed, it's involved buying and selling something real and not just moving money around. So by using the asset, backing our transaction with the real economic activities, we are then engaging in something that is hopefully growing economy in a positive way, impacting society, does not contribute to the financialization in the way that conventional financial institutions contribute, but it is contributing to the real products and services through which we derive all that we need, all the solutions that we need to society in direct way. And just because we're doing something in Islamic way doesn't mean that we are limited. In fact, we are limiting unethical, immoral behavior and things that have in aggregate detrimental impact on the society. What we are enabling is real products and services, financing those things that actually have impact on our life. And so whether it's at a small level or a bigger level, whether you are a government financing or you are individual trying to organize your transactions or just buy a home or a car, there are a number of ways that we want to engage. And for finance provider, in our community, we want to make sure that they continue to build their products and services in line Sharia, understand and satisfy these requirements. And we hope that, inshallah, this was a beneficial course. I'll see you in another video. Don't forget, on our website, Muslim Money Matters, you can engage more deeper in this course. We are also having professional development courses that go into much more details. And if you want to test your knowledge about things that we have talked about here, again, you go to Muslim Money Matters website, register, and when you pass, inshallah, all the assessments, you will, inshallah, get a certificate for this particular course. I hope to see you in the next course or video or a seminar that we are organizing. All the best. May Allah bless you. Assalamu alaikum wa rahmatullah. Thank you for spending time to watch this video. If you would like to learn more about finance and economy from Islamic perspective, head to our new platform, Muslim Money Matters, where we go in much greater details regarding the content. Until next time, my name is Almi Cholan. Salam alaikum.